good morning, everyone. Welcome to our Thursday morning trading session. Hang on here while I get the screen share going. All right. Well, the markets have been unusually quiet. I've been checking a few of the forums and a few of the websites that I follow, and nobody can really put their finger on it. There is a definite lack of volatility, and yesterday saw primarily really another sideways kind of trading day. Here's the eagle for yesterday's session, and you can see just blah, just sideways, which explains why we were looking at a lot of scalp signals yesterday. And today we're opening a little bit lower than where we left off, the market leaving off somewhere around the 48.35, 36 mark. And we're opening a little bit down here. Just about to produce a sell signal near yesterday's lows. Oh, the warning dot disappeared, so we'll put that away. The markets that I'm looking at here are the Nasdaq. I'm also following soybeans and crude oil on my other monitor, but please feel free to ask for any market you're interested in, or if you have questions, please ask, because it helps pass the time when there's nothing going on. So for those of you new to the DTS room this morning, I see a couple of new names in the room. Welcome. You've probably already figured it out, but let me give you a real quick overview. I've got my charts organized with the Hawk Scalper across here at the top corner, top left, Falcon Swing Trader, top right, Eagle Trend Trader, bottom left, and then the Raptor on the bottom right. So, well, we just have to wait. There's nothing to do but wait. Crude oil also, well, actually crude oil fell off a little bit through the overnight. So crude oil, not a bad rally yesterday. Kind of did its duty, rallied its 100 points, which is what crude oil typically does. I guess it came up a little bit light. Looks like they got about 80 or 90 points out of the rally. And then they settled in a little bit before the close, but overall a fairly bullish session. And then through the overnight we saw crude oil declining somewhat. So it's almost as though crude oil, I don't know, they may try to get back down here to the $50 mark, $50 a barrel. And soybeans started with a little bit of a run up out of the gate here, or actually prior to the open. We had a little macro pullback signal here about an hour before the North American market opened, and good progression from there as well, but no real signal to start in soybeans yet either. Yeah, sure. Elmer asks, the two clouds on the Raptor, can you show me how to get that second cloud? Now, I do believe this has become standard for the Raptor download now, but it's really very simple to do, Elmer. So right-click on your chart, and here in your indicator assortment, you're going to find one of these IW indicators that says IW RTS Raptor Cloud. If you double click on that, you're going to end up putting two Raptor clouds in your indicator assortment. The first Raptor cloud changed to 8 ticks. The second Raptor cloud, you can leave at the default 12, but you're going to need to change the color. Otherwise, of course, you won't be able to differentiate between the two. So choose whatever color you want. Ditto for the band edge, you're going to need to change the default color there. Anything you like. And then go ahead and apply it, and voila, you will have a double cloud on your Raptor. Okay, speaking of the Raptor, we've got, looks like a soft edge buy. I'm going to give that a go. We'll go in light though, and we're going to look for a second push on this signal, which all that means is I'm going to look for the market to come in with some renewed momentum. Allowed the signal to trigger, so here was the signal. I've allowed the signal to trip, and then I watch to see where the market pulls back from the signal. And it looks like they keep pulling back. Oops. All right, I'll cancel that because that's no longer a valid order. Steven says, hi, Rich. Actually, I get the odd person calling me that. They don't recognize the spelling of Eric. Okay. Stephen asked, I've always wondered about the stop limit ticks. Stop limit ticks 1 refers to or how it operates on the top of the trade manager. Sure, let's take a look at that. So we've got stop limit ticks here on the Trailblazer, and then we also have the stop limit ticks here on the trade manager. So what that does is if we change our order type to a stop limit, now all that means is that, oh shoot, they're going to run away from me here. All that means is that when I place the order, I've got a limit on how much slippage I'm going to accept. In this case, 1 tick. Now, it's not so much a problem with a market like the Nasdaq or the E-mini or anything that's relatively liquid, but it can be a little bit of an issue when you run into a market that's liquid. You know, if you're trading, oh, I don't know, whatever, oats, where you may end up getting a huge slip on a trade. So there's our first micro-macro cross signal. And that looks like that's going to be the move of the day. Shoot, bad time to, should have been on the alert for that. Doug. it looks like we do have some increased volatility. And now it's a question whether or not we're going to get that chance back. Here on the Eagle, of course, I didn't get a chance to point this out, but I did want to point it out to you. Unfortunately, the market bolted. One of the room members here brought this to my attention, Russell. He's been following the first Eagle signal. Oh, Russell's in the room as well, and he mentions it. How about that first Eagle signal, Russell says. What Russell's been keeping an eye on is the first in-sync Eagle signal. Now, I actually knew another one of our DTS owners, Derek, and I don't know if he's in the room this morning. He used to do the same thing with the, no, he's not here. He used to do the same thing with the Falcon, where he would look at that first signal out of the gate, and for him, it was just a very small scalp. So this was the first signal that printed where everything was, no, I guess it wasn't in sync. There it was. It came into sync a bar or two later, and he would just look for a quick little grab, right? Get in, get out, make a little bit of money. And I think it was more of a confidence booster for him than anything. But it worked out well. Anyways, Russell mentioned this to me a couple weeks ago. He says, Eric, I've been noticing that that first Eagle signal that's in sync tends to have some really good follow through. And sure enough, he's right. More often than not, that first signal that the Eagle prints, now it needs to print in sync with the band. You're not so interested if this were printing a buy signal. I don't think we'd be quite as interested in it. But yeah, look at that, boom, right down to the profit target. Now we're getting a little bit of support coming back into the market, which is what you tend to expect as the market hits its high probability target. Yesterday, it was a similar thing. Here was the buy signal. Now, the band was not in sync yet, so I'm not sure if Russell gave that one a go or not. A few minutes later, we had, oh, we did get a, nope, that one was out of sync too. Well, technically, the band is out of sync. This is a green bar sell, but the market just keeps flipping around. I suppose this would be your first in-sync signal right here. Came about 45 minutes into the session. This would be difficult to take, though, because looking at this, I don't see a really good retest of the low. So I would be thinking the market's going to retest the low, and you can see that kind of puts the trade out of reach for me. But let's say we do it like this. Loads a chop. Oh, it never, nope, never did get up to its profit target. So no Eagle signal yesterday. And the day before I noticed, I think we had some decent follow through on it, although we would have had to run a relatively deep stop again. So here's the market open. Here's the first in-sync signal. You could say that's swing one. This is swing two. Is that enough to hold us in the good books? Yes, it is. So took a little heat on it, but it did rally to meet its profit objective. So very interesting observation, Russell, and thanks a lot for sharing that with everybody. It's something to keep a lookout for. Hey, way to go, Tony. Tony says he grabbed that first Falcon signal. Good for you. Okay, so now that we've seen the market bolt to the short side, I think we're going to, oh, shoot. I was just about to say, I think we're going to see a bearish session, but maybe not. Oh, we got some big rally bars coming back here. The sellers might be spent. Careful what you wish for, Eric. You wanted some volatility. You got it. Elmer's asking, Eric, can you give me how you interpret the double cloud? Sure, Elmer. Ricardo was the fellow who actually came up with the double cloud for the Raptor. And you Raptor owners, a reminder, there is a Facebook forum that you can frequent and share trading ideas. If you don't have the address to the Facebook forum, please email Adam and he will hook you up with that. There's also a DTS Facebook forum, if you would like to follow that, where owners share trade ideas, setups that they're liking, setups that they're experimenting with, and so on. What Ricardo found was that with the stock cloud, he wasn't getting very many hard edge bounces. So for instance, you would get a signal like this, which is essentially a hard edge bounce, but it would come up well short of the stock band, which was back here. So he decided to put a double band on. And Ricardo, to be fair, he has a much closer profit objective than I do. So he would be essentially looking to scalp, and I'm sure he partially swung some of the positions as well, but he would be looking for the market to encounter the hard edge and then to come out and react and print a signal. In this case, we didn't print one, but you can see a nice little reaction there. And then, of course, sometimes the market would act a little bit early when it encountered the hard edge. So that's something to keep in mind. Now you've got two hard edges to watch, two areas where the market may actually make a reaction. We also got, as a result, a couple of very interesting signals, one of which is the soft edge sell. Now the soft edge sell, our target tends to be the hard edge of the trading band. So the soft edge sell is a counter trend signal, so we first have to have a trend. After that, we need to see a test of the extreme. In this case, the extreme is the high. And then we need to see a failure and print a sell signal. So this would be our counter trend signal on the Raptor. And it's essentially a failure, and we're looking for the market to get to the hard edge, which it does. We also produced a cloud crossover signal. As the name suggests, the cloud crossover signal happens when the clouds cross over. So let's see, we have, yeah, this will work. So we have the clouds that are bearish, and then all of a sudden the cloud turns bullish. What we look for is we look for the market to retreat into the cloud, and then for the cloud to push it back out. So you see how the clouds have gone from bearish to bullish. The market retreats into the cloud, comes out, produces a buy signal. That's a cloud crossover signal. That's a very strong signal. And you can see we had some nice follow through from there. So those are really the only two variants for the extra cloud. See, now that we've rallied up here, it's looking as though the clouds are trying to cross, haven't crossed just yet. Here, when the clouds crossed over, you could have considered this your cloud crossover signal. This was actually a double pullback signal, and I wanted to take advantage of that one. So there's pullback 1, there's signal 1, there's pullback 2, there's signal 2. So the market drifts into the cloud pushes it out the second time you're looking to short or take that signal. The cloud crossover signal is a continuation signal. It's not something that's just going to develop out of the blue. So it's something that's going to come after a little bit of a trend has already been established. The market, is trying to recover to the upside. Unsuccessful, attempt number one. They try it again. The sellers will normally allow the market to move against them twice, and then they'll jump on it. And of course, vice versa is true for the buyers. But rarely will the market get away with it a third time. That's why the cloud crossover signal works, or the double pullback signal works. Oh, interesting, Tony. Tony mentions here. Tony says, I was looking at some NinjaTrader vids and I came across a way to double the OCO, set to bracket the range just as we do, but to place an OCO buy and sell. I'm not clear as to why it would be the way to go unless you play both sides independently. Anyways, thought I would mention to you while there was a lull. Yeah, actually, Tony, that's I'm glad you pointed that out. I almost like that better than the way I do it. All right, let me point out what Tony's talking about. And let's go somewhere where we can play safely. No, we'll try crude oil. It's a little bit more obvious. Okay, well, not really, but close enough. So with the OCO order, we normally use the OCO order to bracket a trade. If we suspect a market is moving sideways and we have this little sideways congestion period, we can use the OCO to buy a breakout above or to sell a breakout below. Now, the way I normally do it is I will place my OCO to buy. So I'll enter my buy order, I'll enter my sell order, and that's my OCO, OCO1. And then what I do sometimes, if I have a profit objective, I'll toggle the OCO, and now I'll set my profit targets. So what this does is, let's say the market rallies, it fills this order, it cancels the other order that's paired with it. So it fills the buy order, it will cancel the other OCO1. Then once if the market hits my sell limit, my profit target, it will also automatically cancel the OCO2. Now what Tony says they're doing is, and I like this idea better actually, we'll put our buy stop in and we'll set our profit target. Now toggle it, put your sell order in along with your profit target. So what this does is it only validates one side of the trade. It never leaves an order open that shouldn't be there. Now, I guess in crude oil this could be a little tricky, especially around inventory report when the market gets so whippy. But the idea here is that, oh no, that wouldn't work, would it? one cancels other. This one fills, that one cancels. Well, I wonder why they would do that then. Because if... Oh no, it should work. I think what the idea is, once they fill here, this order becomes your profit order, and then you can cancel the other order and that will disappear. Yeah, that's what's going to happen. Okay, sorry. Had to think about that for a second. Because once this order fills, this next becomes an active order. There's no reason for that order to cancel. I'll have to try it in the demo room to make sure it actually works that way, but it should. So what they've done is they've set up a bracket, and if the sell side fills first, you can manually cancel the buy side, and that will disappear, and you'll have your entry order and your profit target, and if you're using the trade manager, you'll also have an active stop, because the trade manager will default to whatever your stop strategy is. Yeah, that's interesting. Thanks for bringing that up, Tony. I never, honestly, I never considered that. I like it, though. Ouch, Bob. How did that happen? Bob says I got whipsawed out of this trade to the tune of $500. Ouch. Don't like to hear that. All right, so after that early move to the downside, here we are. Market pretty much recovering to where it began. And now we're quiet again. All right, well, they're dead, so I got a couple questions here. Russell's got a good question, and Keith reminding us that existing home sales report at the top of the hour. So that could be why the market's a touch quiet. Yes, we do have a first micro-macro cross signal here, folks. It is a valid signal. You probably want to set it up like that. The problem I'm having with this is I got to risk it way, way, way down there. Not that that's a bad thing, but we might get a better entry on that. Russell asks, question for you. How do you view the significance of the cash close at 4:15 Eastern versus the midnight close? The effect that each has on the next day? Good question, Russell. The cash market always used to be something that traders would watch, trying to forecast where the market would go. The idea was that the cash led the futures. And by watching the cash market, you could get an indication of where the market would go next. I think that still works. I think that still works on the very short term. So for instance, if you were watching the cash during this decline, the cash was probably looking something like this, where the cash was leading, by a few seconds and then turned before the bottom came in. And this is all, like I said, just a matter of seconds. I don't think that the cash has that much influence over the futures, or as much as it used to. I know personally I don't follow it anymore. But of course, my criteria for following anything is, does it help you make a decision? Right or wrong? Regardless of whether you were right or whether you were wrong, does it help you make a decision? And that comes from helping so many people who have just got so much stuff on their charts. It's crazy. We're kind of sidetracked here this morning. May as well build a chart and show you. This was the chart of one of the fellows who asked me to give him some coaching advice. And I suppose it's not too terrible, but when you look at it like this, how do you see the price bars? You've got so many lines overlapping. This would be what the cash index was looking like on this move. This would be very similar. And you can see it may be leading it by a tick or two, and it just turns a little bit early and then comes back. I think this is actually a linear regression or something, if I remember correctly. But his system was so convoluted, it was almost impossible to trade. He would say, well, when the black line crosses the brown line and this crosses that and so on and so forth, he just had so much stuff to follow. Worked great in hindsight. He would look at it and he would say, yeah, I'd be selling right here and look at that great move lower, and I'd be buying down here and look at this great move higher. He didn't really, though. So if it helps you make a decision, then by all means, go ahead and follow it. Tony's sharing a YouTube link for that Ninja channel question he asked me. So it looks like the market has gone from bearish to bullish. So that first micro-macro cross had some decent follow-through to it. Look at that one go. So there's the first micro-macro cross. No problem whatsoever hitting the profit objective. Nice one to try to throw a runner on. So we've here on the Hawk actually two nice first micro-macro crosses out of the gate here, and then the follow-up right there. and says the DAX is hyper. Yeah, I don't doubt that. I don't doubt that for a second. Lots of stuff going on in Europe today. And some of the commentaries suggest that the reason the North American markets have been so dull is because there's a lot of stuff coming out from the banks in Europe, the EU, what they're going to be doing regarding their economies. Well, I'm starting to wonder whether we're going to get more follow through to the upside or whether this is just going to be a great big trading range. Back here to the Raptor, you can see we've got this cloud crossover now, and we would expect the market to drift into the cloud and then for the cloud to push it out and for that to produce a buy signal. Crude oil getting a little heavy, very sideways still, and of course the problem with crude oil is trying to cover this position. So we've engaged the sell signal. You could look for a second push on the entry. How far back can I cover that? No, can't cover it back there. Got it. To the hard edge? Oh dear, can't even get it to the hard edge. I don't like covering the trade ultra tight like that because it gives me absolutely no staying power. If you're going to take the trade that way, just be aware that you may get stopped out before you get to your profit target. It's just how it is. All right, well, we're back near yesterday's highs. Not quite the overnight high, but certainly during the yesterday's trading session, the 4840-ish area. We'll see if they try to recover from here. All right, so here's soybeans. Trying to produce a buy signal. Not quite a hard edge bounce yet. But we'll see. You could look to buy. Well, we're currently against the ATR. You could look for the market to flip the ATR over. Or you could even just look to take a second push on this signal. That would be fair. Let's see, there's swing one. Technically, that's swing two down there, and that's going to put it out of reach. How far can it go? Well, we could do one of those. So you can see, according to the trend line, that would be very close to a hard edge bounce if we get it. Well, I'll have to put that away for now. They're taking their time with that. Just curious what the Falcon was looking like, because the Falcon already here on the soybean market producing a trend change signal, and now even working a possible late filter entry signal should the market close on the low or near the low. So a little bit of conflicting information perhaps in the soybean trade. And speaking of conflicting information, the Nasdaq is starting to recover again to the short side. So it's very odd to see these sharp bottoms and tops, how the market just makes a peak and doesn't give us a test of the extreme or anything like that. Now we're into yellow bars, so I don't need to worry about that signal. Yeah. Keith asks, can you give input on the Raptor currently looking for a hard edge buy? Yes. We've got the cloud crossover, Keith. So technically, the market is bullish. Right? Our bands are stacked in a bullish way. The market's into the hard edge. It's going to try to bounce out of here. It's going to try to produce a buy signal. It is a valid buy signal. That would be the cloud crossover. Trying to produce a sell signal, though. Got a red sell signal here. Funny kind of day today. You know, when the market made this dramatic move lower, I was just about to say we're in a bear market when the market made a dramatic move higher, after which I would have said, okay, we're in a bull market, and now the market is relentless trying to push lower again. They're totally uncommitted. See, here they go. They're trying to sell the market again. When the market keeps bolting from me like that, I have to say I get a little bit gun shy. You know, in hindsight, this first micro macro cross had some great follow through. But when it was forming and I see, you know, this cluster of resistance back here, I couldn't help but think, well, what if the market tries to retreat, give me a macro pullback? You know, it's not the end of the world, but where do I place my stops? I don't want to place them at the macro line and get stopped out. If I place them way back here, okay, it's a little bit better. Back here, well, if I'm going to go back here, I may as well go below the lows. I suppose I could have turned it into a runner since it was just a single contract. Maybe made $100 on the trade. That might have been a little bit better. Well, we'll see here. If we get a first micro macro cross to short, oh, we've already got our sell signal here in the Falcon. We've got our trend change signal. Here's the down that changed the trend line color. Here's the up. Here's the down. What's this going to cost me to be wrong? Hmm. Hmm. A move back to 48.19 is certainly plausible. This is from where the sellers rallied the market the last time, though. Pardon me. The buyers rallied the market the last time, right? For this little uptick right here. This is where it started, right where we're at, right here. Around the whole 48, 24, 25 area. We've printed a green bar, but we're still printing the warning dots. All right, because this is just a single contract, I'm going to see if it won't run a little further. Come on, keep going. If we can get it down to the 48.19 area, I think I'll go with something perhaps a little bit more aggressive like parabolics. I don't want to roll my stop just yet, as there could be a fair amount of choppiness involved. right, so there we go. I'm going to enable the parabolic stop now. And hopefully it'll keep me far enough away. Come on. Come on, you sellers. Don't give up just yet. I am a little bit aggressive on rolling my stops in here. Actually, the best place to leave the stop is up here above that swing high where we started in case a little bit of a swing comes through here. Which is entirely plausible. I'll try not to be too greedy. If we can get the market back down here near the lows of the day, I'll look to take some profit. Come on, Falcon. Let's go. You know, the soybean trade that we were looking at originally. Oh, come on, don't flinch now. Come on. Whew. Okay. Well, took our share. After getting shut out from those first two moves, we had a nice opportunity on a trend change signal there on the Falcon. I was going to point out to you the soybean trade, that late filter entry signal. Look at the follow through on that. Tremendous. So there's the, could have set it up something like that, and great follow through to the short side. So whereas the Eagle is looking a touch bullish on soybeans, the Falcon already suggesting that the market was going to head lower, and sure enough, that was the result. Oh, and look, now we're getting a little bit of a bounce off of our support and resistance line. Imagine that. So whereas the market started the day bearish, then went bullish, it's now bearish again. Oh boy, if you're not careful, you're going to give yourself whiplash. Buyers, of course, digging in now that we're back toward the low of the morning, or near the low of the morning. All the buyers that rallied from down here, a lot of them are looking for the market to react again and continue higher. Right now, though, it's all sellers. Look at that. Yeah, Tony says we just exceeded yesterday's range. Actually, we're right on the number according to my day ranger, but close enough. There we go. Now we're past yesterday's range. Wow. Oh my goodness. I should have had two contracts in play. Look at them go. That's crazy. No pullback, no nothing. This is a very unusual day. You can put this one away in your memory banks because you're not going to see a day like this for quite a while, where we get such pronounced swings without pullbacks, without the market consolidating, just picks a direction and goes. That is very, very odd. Same thing with the soybean market. What is going on here today? Like soybeans can trend, but this is something else. A need the Twilight theme, Twilight Zone theme playing. All right, so the market actually moved how many zones here? So our signal produced here 1, 2, 3 full zones. That's huge. Actually, if you count it from the primary, it's 4 zones. 1, 2, 3, 4 full zones. And they're not done. Wow. All right, maybe, just maybe, we finally seeing a bottom come in, maybe. Short term, of course. Well, it looks like we're in hold mode again. All right, well, nothing else going on. Soybeans also in a major decline, but they put the brakes on the same time that the Nasdaq did. Yeah, maybe. Steven says crude's likely driving this, but crude oil didn't have nearly the decline that we just saw. There used to be a much closer correlation between crude and the stock indices than there has been of late. But a lot of times those correlations come and go as well. Yeah, it could be Tony. Tony says looks like there's a bunch of buy orders around the 47.82 area from about a week or so. If you'll remember, though, 4,800 has been a pretty influential number for this market this last week. We spent a lot of time hovering around 4,800. And I suppose they figured if they're going to fall off from around 4840, 4800 is a good place as any to start digging in. I do believe we're going to see another leg lower here. I do think the market owes us that. But we might have to wait for them a little bit. Our macro pullback signal here in the hawk fading, heading higher, the trend line shifting again on the falcon. Wow, don't tell me we're going to see the market move straight up again. Our macro pullback now we can disregard because we're into yellow bars here on the hawk. This is bizarre. We could see the market retrace all the way back up to here, to the 48.19, 48.20 area. So now we're back to where this whole rally began the first time. See back here? This 48.10-ish price. That's where the market bolted. Bolted higher the last time, so we're getting some buying support through here. Are the sellers going to squash them? Or are the buyers going to flip it around yet again and push the market higher still? Personally, I think where we're at right now, the market is still more bearish than bullish. Here's a green bar sell you can take advantage of. I would probably go all in, all out on target. Just look for a little scalp, a little retest of the low. All right, so the market engaged. There we go. Almost to the break even. This bar needs to finish on the low. It would hit the break even trigger, and then hopefully a tick or two after that hit our profit objective. They're trying. Come on. You see, there's a possibility the market will try to retrace, and then the sellers will try to sell from a better price. There we go. So we've hit the break-even trigger, and another tick, and we should get the profit. There we go. So we've hit the profit target. A little bit of a struggle, but that would have worked out to be a profitable trade as well. As you can tell, I'm being a little selective today just because the market is weird. All right, boys and girls, I think we're going to button up the trading room here. If you are going to continue trading today, I can see a little bit of a rally, especially if we take out this little swing high. So you could look to buy the failure of this green bar sell. I might think a rally to that resistance line at 48.19 is a plausible target, after which we could see the sellers get a little bit more serious about stepping in and trying to push the market lower again. But yes, a very unique day today. All right, I'll catch up with you again tomorrow morning. Bye for now.